Welcome back, everyone, to Godspeed Today. I'm your host, Riley Roseby, your navigator, the man behind Godspeed. Fun program today. We are in the heart of earnings season, and it is absolutely a bonanza. We're having companies gap up left and right, going up 20%, 25%. Things are going crazy. This is a bull market, folks. And I want us to take a look at the heat map from today. And we can see we're going to touch on Apple a little bit. Apple kissed the ring. They're up 5%, potentially breaking out of their little sideways range that, was a crapshoot whether it was going to break higher or lower. Amazon bouncing back after last week's earnings report. Tesla's making moves. We're going to talk about that a little bit later too. That stock just continues to hold in there. It's not falling. We're going to touch on it in a little bit, but I want to start with Palantir, right? Palantir continues to impress. So if you guys have been following me for a little bit, you know that I like Palantir, and it's not necessarily because everybody likes Palantir. That's part of it, right? You want to follow the crowd to a certain extent. You don't want to always be this like isolated outsider. If we're following trends, you got to follow the crowd until the music stops. And so far, the music has not stopped for Palantir. Another record earnings report. We can see U.S. revenue grew 68% year over year. Total revenue grew 48% year over year. And then that rule of 40 score, right? The operating margin plus revenue growth, 94%. Let's just let that sink in there for a little bit. That was 11 points higher than the rule of 40 score last quarter, 83 at 83. And if you guys recall, I wrote a blog post about it. Is this an incredible buying opportunity? Because Palantir reported the best earnings report of all time. The stock gapped down 12%, immediately got back up. It's up like 65% since that price. And then this quarter, they topped that. Now, does this mean Palantir is a great buy at this point? Probably not to start a position here after earnings, but like if you're holding for a serious amount of time, unless you're feeling anxious about every single tick and fluctuation in the stock, just hang on. This thing's not going anywhere. It might have its up and down 5% days, but long-term, the trend is higher. And let's just take a look at this chart. And this was from Alex Karp's letter to the shareholders. The growth rate of our business has accelerated radically. After years of investment on our part and diversion by some, the skeptics are admittedly fewer now and have been defanged and bent into a kind of submission. Yet we see no reason to pause, to relent here. So if you guys are unfamiliar with who Alex Karp is the CEO of Palantir. Very, very eccentric man. Highly recommend checking out his book here, The Technological Republic, Hard Power, Soft Belief in the Future of the West. The TLDR, and I know JC's touched about this a little bit, is he's just kind of bitching at Silicon Valley for creating all of these quote unquote useless consumer applications to deliver food, find dates, that kind of stuff. Alex Karp wants to go the other way, right? He wants to build companies that are not only useful, but help in the protection of the United States. Here's that chart. And this is that price move that I referenced from its last earnings gap down in May. Absolutely monster move on earnings this quarter. And we saw a little bit of follow through today, right? So if you're looking to get exposure into Palantir, you got to let this thing trade. You got to let the earnings gap and this hype after earnings subside. You got to see if there's a clean risk entry. If you want to take a feeler and start nibbling, go ahead, keep your stops tight. But we're going to look for a flag on this one because we've seen, and we'll go through a bunch of charts here in a little bit, but we've seen these flags play out this earnings season, right? We're in a bull market. So we want to be buying the strongest stocks. Stocks that gap up 20% on earnings, especially if they're gapping up to all-time highs, consolidate for a few weeks, tend to break higher, right? In that consolidation period, people forget about these earnings reports because we have thousands of earnings reports every single quarter that we have to go through. So investors forget, they lose track, and these names just drift higher. This is the post-earnings announcement drift theory, PEAD. If you guys are familiar, I am a heavy subscriber to this theory because an object in motion stays in motion. And an object that gaps higher, consolidates sideways, will slowly continue in the direction of the underlying trend. So Palantir, tough buy up here. But if you've been long, if you've been tuning into Godspeed, just stay the course. Ride the wave. Let the market tell you when you're wrong. Obviously, if we get a close below that gap down, that's not a good sign. We want to hang on to that gap. But aside from that, just let time do its thing. Joby. Now, flying cars are coming. We're less than 6 months from 2026, and all eyes are on Dubai. At the beginning of this year, both Joby and Archer kind of commented that we're going to get flying cars in Dubai before the end of the year. Well, that is probably not going to happen. You know, we might get into Q1, Q2 of 2026 before we see air taxis live, and Joby's not waiting around. They're getting busy. So this, before we kind of touch on a little bit of their earnings report this afternoon, but these 4 press releases are all issued since August 1st. And I just want us to take a moment to read and kind of digest what's going on here. So Joby collaborates with L3 Harris to purchase defense applications for autonomous hybrid VTOL aircraft. So Joby is sinking its toes into the defense sector. It's seeing what Palantir is doing. It's seeing what all these aerospace and defense stocks are doing. It's dipping its toes in. Joby acquires Blade's passenger business, accelerating air taxi commercialization. So not only are they coming at it from the defense angle, they're coming at it from the commercial angle. And they're making a really, really interesting case here for building their own kind of moat, right? This is a brand new industry. This is in its infancy. Obviously, we thought at the beginning of the year, Archer had a leg up with its defense contracts, but now Joby's making a roaring comeback. We've seen this in the price. We've been talking about it. I got a chart here in just a sec. We'll go to it, but let's take a look at these other press releases. ANA Holdings, Joby plan to accelerate air taxi deployment in Japan. Shout out Japan. Absolutely love Japan. Will hold demonstration flights at Expo 2025 in Osaka. Once again, folks, if you've been following me for a little bit, you know I'm kind of watching this Osaka World's Fair taking place, seeing what the trends are coming, and eVTOLs are all over this thing. It's not just Joby. We're seeing EHang make its appearance. We're seeing SkyDrive out of Japan make its appearance. And then this last press release from Joby, Joby's first conforming aircraft heads to final assembly in preparation for the TIA flight testing. We are getting close to that FAA type certification for these aircrafts to actually begin to operate here in the United States. And based on Joby's acquisition of Blade, my suspicion would be that this is coming soon. In the US, I would think within the next, let's give ourselves some room, 6 to 12 months, there will be an air taxi service with an eVTOL in the United States. I don't think Joby would jump the gun and acquire Blade at this moment in time if it didn't see that finish line in their roadmap. And then here's that chart. Absolutely monster move. When Joby announced that acquisition of Blade on Monday, the stock gapped up 20%. Absolutely berserk. And then when I was looking at the earnings after hours, the stock was down about 5%, which is, you know, folks, this is fine. Both Joby and Archer, these are pre-revenue companies that have the potential to reshape how humans move. I don't think, I really want that to settle in here. Like, this is a new category. This is a new frontier. And in transportation, I mean, certainly in my lifetime, but probably most of y'all's lifetime, we haven't seen innovation in transportation to this extent, specifically within the aviation industry. Now, there's so many factors that go into this: regulatory, cost of development, time of development. Like, this is a mega trend. eVTOLs are a mega trend. And just because the stock is gyrating a little bit doesn't mean we want to not accumulate these names. So, you know, for us getting into a mega trend, it's best to dip our toes in the water. If you're sitting on some nice stock, let's say you got about average cost of like $10, let this thing ride. You know, maybe adjust your stops a little bit. Maybe try and get cute if you want to add more and get some juice. But like, folks, this is a mega trend. I don't want to keep saying it, but this is a mega trend. Here's Archer. Now, Archer hasn't played that catch up yet, but we'll see in time here. I wouldn't be surprised. I mean, we're at the lower bounds of this range that we've been in since May, right here at $10. And I want us to remember $10 is the SPAC price that these companies IPO'd at in 2021. So that price level, that $10 level, has a ton of history, a ton of memory. We need to hang above that $10 level. So obviously, looks like Archer closed down here at 982 today. Probably don't want to really get involved unless this thing is above $10, but got to keep our eyes on Archer. You know, we don't want to be focused on Joby, waiting for that next move in Joby and miss the catch-up trade in Archer. Shout out to Steve Straza if he's watching. I know he loves these catch-up trades. I prefer to buy the leaders. You know, I like the mustard, I guess you would say it, the Dijon mustard. Straza likes these catch-up trades. Next topic up today is Apple kissed the ring. And I've been waiting for this for a little bit, right? Because all the big tech companies in the United States have gone to see President Trump, pledged their support to funding different manufacturing supply chain initiatives here in the United States. And Apple finally bowed down. They're going to commit $100 billion to the United States, focusing on U.S. manufacturing, localizing supply chains. This move also comes to mitigate the tariff risk from Trump. And we saw a nice move today, right? So we're talking these ranges. Apple is still trapped in this range, stuck below 220, you know, holding above 200. The CEO kissed the ring. Now, does this mean Apple's a glaring buy? I don't think so. Not yet. What are these guys doing with AI? We have no idea. We know Tim Apple is talking about Apple needs to win AI. Where is it? We're waiting patiently. Meanwhile, products like Perplexity's Comet, Google's Gemini, ChatGPT 5 is coming out tomorrow. Like, AI isn't going anywhere. Apple's not going anywhere. But we got to see if the two come together, Apple and AI. Now, Tesla, another Mag 7 name. Tesla won't go down. Look at this chart, folks. Today, the stock was up like 3.5%. I don't know what else to say. I think I've been talking about it for the last 3 or 4 weeks here. And I'll continue to talk about it as long as it stays in this range. We're going to get a volatility expansion at some point. The question is, are we going to go to the upside, or is this thing going to cascade down to 200? Based on everything Tesla's involved with, autonomous vehicles, electric vehicles, building robots. The CEO founder is also involved in rockets. He's building computer interfaces for our brain. He owns Twitter. Do we think this chart's going to go down? Like, I continue to go back to that question of who is left to sell. At this point, if you haven't sold Tesla, I don't think you're going to. And I think there's tremendous support here to be buying it. So obviously, the big heuristic to watch here with Tesla is its robo-taxi battle with Waymo, right? It seems like every single week these guys are adding a new city to their operations, or Tesla's expanding its geofence in Austin. Something is happening every single week. It's kind of a 2-horse race at this point. It's super exciting, super fun to watch. And we can follow price with Tesla to see, you know, who might emerge as a winner. We really, really got to pay attention, folks. If Tesla breaks above 350, you got to keep your eye on this thing. I would set alerts at 350, 352, 355, 357, because if and when this name gets going in either direction, right, to the upside or to the downside, we know Tesla trades as a meme stock. It's the original meme stock. So just beware, right? If you're getting involved, don't get too heavy too early. Let the trend set itself, because right now this is trendless. We're trend followers, right? We follow trends. Right now, Tesla is trendless. We look at the underlying trend going back since the inception of the company. This chart is going up and to the right. I'm not going to bet on this demise of Tesla, but we don't want to get too early, be too eager too early with this trade, right? We want to wait till it's done. Wait to stick a fork in it. Now we got some earnings. I got a lot of charts here because it is earnings season. And this earnings season has been absolutely crazy. We're having names pop up left and right, breaking out to all-time highs. Here's one, BWX Technologies. Now, these guys supply nuclear components and fuel primarily for the United States Navy submarines and aircraft carriers. Absolutely monster beat yesterday, ripping 20%. Stock is consolidating, right? So the exercise I'm going through here is just kind of running through these charts. I want us to keep note on these names. Like I was saying at the top of the program, right? When a stock gaps up 20% on earnings and it does nothing for like 2-3 weeks, just goes sideways, doesn't give back that entire gap, we want to keep an eye for that thing to turn higher, right? There's momentum to the upside already. We saw that with the gap. Now investors, longer-term investors, folks with big money in their pockets, they need time to digest these numbers. They need time to place their bets. And then we'll see it in the charts. These things will start to curl higher. So BWX Technologies, one to watch. Bloom Energy, freaking love this chart. These guys develop solid oxide fuel cells for clean on-site industrial and data center power generation, right in our wheelhouse. We need data centers if we're going all in on AI. Beautiful chart. Now, this thing has already kind of drifted higher following its earnings gap. But the reason I wanted to bring this one today is take a look at this long-term chart. This is going back to what, 2018, 2017? I mean, it's a really long handle, but this is a beautiful cup and handle. It would be a horrible handle to try and hold a cup of coffee out of. But like, look at this thing. We get above 40 here. This thing could absolutely go berserk. The market's setting up for it. Names are gapping up on earnings. We're in this weird rate cutting environment that we haven't had rate cuts yet, but everyone's anticipating rate cuts. The president is feuding with the Fed chair about rate cuts. It only seems like a matter of time when rate cuts set in. And these speculative stocks, these high growth names that have yet to prove themselves as these cash machines, are setting up in really, really good ways. Here's Shopify. Look at that breakout. Not quite to all-time highs. I wouldn't be surprised before the end of the year, though, if this thing knocks on the door at 200. Artisan Networks. Beautiful gap today. 17% today. Produces high-speed networking gear and software for cloud scale data centers. Data centers, folks. We need data centers with AI. Big theme here. Now, here's Meta. We talked about Meta's earnings last week. Absolutely crushed it. And look at what this stock is doing. I'm talking about these like slow little drifters that are just kind of moving sideways after earnings. Meta with a beautiful earnings flag. I mean, it's early, right? We've only traded 5 days since those earnings got released. So we need some more time to let this thing digest. But by golly, if this thing takes out its earnings day high, I think you got to be involved. You got to be involved. Beautiful cup and handle with an earnings gap right above those levels. I mean, come on. I don't think a chart gets much better than this. We got Reddit screaming on earnings, knocking on the door of its early 2025 all-time highs. GE Verona screaming. This thing is a little bit of a leaky earnings flag, right? I mean, it's at the upper bound of those ranges, but what a strong chart. Viasat. Now, this company reported earnings today. Monster move, right? 30% move. Provides satellite-based broadband internet and secure communications via geostationary networks. Now, the big deal in this earnings report, and we'll see if this is just a one-time thing. Based on how the stock reacted, I don't think that's the case. But the company delivered earnings per share of 17 cents compared to analyst estimates of negative 9 cents. So not only did they surprise and were profitable when our favorite Wall Street analysts were anticipating a miss, they crushed it. 17 cents. They more than doubled to the positive what they thought they were going to see on the downside. Absolutely monster move. A little suspicious. Last 2-3 days, you can see the stock started rallying before earnings. You know, what does Howard Linson like to say? Markets are rigged. You just got to accept it. So maybe some folks knew ahead of time. Maybe they didn't. Maybe there's some more news to come out that we don't know about. Absolutely monster move to there. Astera Labs, again, another crazy mover today. This was up 28% at the time when I took this screenshot, I don't know, 30 minutes before the close. Designs high bandwidth, low latency semiconductor connectivity solutions for AI and cloud data centers. I think I've said data centers a few times in this program, right? Let's keep an eye on these data centers. Now, we're talking about big winners. Let's talk about some losers, some dogs, right? Anytime you go through a paradigm shift, new technologies are introduced, you have innovation, there's going to be some folks that get left behind. This is just the life cycle of markets. We see it in nature. Markets are a system, and we mirror nature in the markets. And UPS is not well positioned to thrive in this new AI, flying car, drone delivery world, right? We want UPS to bring on a drone fleet like ASAP, because this chart is disgusting. And then we look at this monthly chart, absolutely horrendous, right? We're on the verge of making new lows that would go back to what, 2013, breaking below those COVID levels. This is absurd. Absolutely absurd. Here we got Rocket Lab. Now, Rocket Lab hasn't reported. They report tomorrow, but I love how this chart is setting up. You guys know me, though. I don't chase into names before earnings. So I won't be touching this one tomorrow until the numbers print after the close. And then you watch it and see how it reacts. If we get a massive gap up to that 55 level, all-time highs, I mean, shoot. I think we gotta ride with it. Right? Rocket Labs is going to the moon. We want a ticket on that ride. And then here's the final chart I'm going to leave you guys with today. I know there's a lot of doom and gloom out there. I got a buddy of mine called me up. He was telling me about how his YouTube feed is all just, the biggest housing crash since 2008. And if you're reading headlines, yeah, you're probably going to be a little scared. There's a lot of nasty stuff going on. But look at this Magnificent Seven chart. And I know, yeah, this is cherry picking. This is 7 names in the stock market, but we live in a market cap weighted world. So understand that if these 7 basically drive the entire market, let's just look at these 7. And folks, the Round Hill Magnificent 7 ETF, ticker MAGS, closed at an all-time high today. It is not something we see in recessionary environments. It's not something we see in bear markets. And again, let's keep an eye on the bigger picture. Don't fight the Fed. You could argue that we're in a rate cutting environment. I think it would all take us by surprise if they raised rates. You could make the case that they could raise rates, but in terms of probabilities, I think it heavily favors that we're going to be getting some rate cuts before the end of the year. And what does that mean for risk assets? I think that means we go higher. Folks, that's all I have for you today. Thank you for tuning in here. I really appreciate y'all being here. If you haven't yet subscribed to my blog, check out godspeed.beehive.com. Right on there, 3 to 5 times a week, depending on the week. Sometimes when the weeks are really crazy, you like to let the noise kind of settle itself out. Highly recommend you give it a shot. I put a lot of work into it. I love curating. I love looking at what's coming next. That's what I do. Thanks, folks, for being here. We'll see you next week.